All right, guys, it's Wednesday, October 10th, and I just wanted to take you through an exercise. Well, maybe it's a little selfish here. I wanted to record something I was doing these last couple days with the S&P 500 index, sort of a made-up chart analysis that I was doing yesterday, and it happened to work, and probably got my ego blew up extra large. So I thought, what a good way to prick my ego by making a prediction video, do the same thing, prove myself gloriously wrong, and put it up on YouTube, and that way I can bring myself down to earth. The U.S. index is all down significantly today. The Dow down 3.15%, the S&P down 3.29%, the Nasdaq down 4.08%. These are not everyday kind of declines. I think you have to look back to early February of 2018 to see declines of this level. So tough day in the market. And I see the headline here as well that the Asian markets are not doing so well either. But that's not what I want to talk about. What I want to talk about is how I got to the point yesterday of making a guess about the direction of the market. And, I guess I can't say how it happened to turn out right, but I did make a guess and it happened to turn out right. So here I'll go again. It will become very quickly clear to you that I have no technical training. I am not a stockbroker. I have no stockbroking experience. I am not in any way qualified to give you or anybody trading advice. This is not an advice video. This is purely speculative and perhaps mildly entertaining at times. So when I'm looking at the S&P 500 index, how I'm looking at it is essentially I'm anthropomorphizing the market a bit and trying to observe its behavior and guess where it's going to go. When I was doing this yesterday, based on this anthropomorphic analysis, I made a wager that the market was going to go down. I do have a position relevant to this. I have an inverse ETF. I can't remember what it's even called right now. The tracker is SH. So it was a good day for that. It's been a good week for that. But I was, curious yesterday because it had been going up. The inverse ETF had been going up for a few days. I was trying to decide if I should just liquidate it and book those gains, or hold on and see where it was going from there. So when I was looking yesterday, October 9th, I was trying to determine how the market was thinking or feeling, and how it was going to act. The reason it looked weak to me, the reason why I thought it was going to go lower, is as I looked back over the last couple months, I saw a few signs of weakness. First of all, the market made a high on September 20th. Then it failed to retake that high on October 3rd. And instead of continuing up, it capitulated. The buyers sort of disappeared. And I read that as a rejection of that previous high. At least the market at that time is saying, well, there's no buyers here that are willing to pay you more than what you already paid for your asset. So that was one sign of weakness, and that can be distinguished. As we're looking at the 6-month chart here, you can see previously over these last 6 months, when you'd have a high, the market kept making new highs. So you'd have a high, you'd have selling off, which is normal, and then the market would make new highs. Right, it kept making new highs, some selling off, but the market kept responding with new highs every time. Every time the market sold off, buyers came in to create new highs, and this kept happening. You have these valleys and peaks and valleys leading all the way up to September 20th, and then it failed to retake a new high, but rather started going down for several days. It started a new valley without even having, without even having taken a new high. The sell-off, the selling had started. So that was a sign of weakness. I also saw, prior to that, from essentially the 24th or perhaps Monday the 27th of August, more or less sideways trading in the index for several weeks, all the way really to maybe the 19th of September. So a good 3+ weeks there, more than 3 weeks, where it didn't have a positive direction. It was a rather ambiguous state for the market. So I saw that, not necessarily as a negative sign, but a sign that at that time there was an ambiguity in the market, some lack of buyers' interest. In particular, I interpreted this series of days. I interpreted this failure to reach a new peak as a rejection of the market's previous answer to this ambiguity. So I viewed this height of 2930 as a sort of response to what I saw as the ambiguity or uncertainty in the market through the end of August and through much of April. That a postulate or an assertion was made by the market at that time that 2930 was the correct answer to the ambiguity. However, that answer of 2930, in my view, was rejected by the failure to recover top, and therefore, at that point, looking yesterday, the correct resolution to that previous ambiguity through the end of August and September was a negative one. That was what the market was indicating, that in fact they wanted a negative resolution to that previous ambiguity. So, where that would go from there, I wasn't sure exactly, but I, was looking at this as setting a sort of bottom or range of 2,900 as what that market that previous ambiguity was considering, and that it failed to hold that, and that we should be looking somewhere in 2862 or 2860 perhaps as the previous floor. So that's where I came to yesterday. I decided to keep my position open in SH, and of course I'm glad I did today, because coincidentally the market decided to go along with my interpretation. Now it's easy talking about yesterday's interpretation. I want to apply that today, as I said. So where do I think the market's going tomorrow or the next couple days? Well, I want to ask, what question does the market want to ask next? In my view, the next question the market is going to ask is somewhere around 27, maybe 27.13, maybe 27.30, somewhere in that range. The reason I say that is because the previous floor was around 2,800, and that, the index was dancing around 2,800 all the way from July 10th, really till certainly at least to July 30th. So that represented a pretty lengthy floor for the index. People were buying, buyers were coming in off of it quite well, though the index kept returning to that. So that 2,800 level looked like a pretty reliable floor. However, if we zoom into today, we see that the index fell through that floor. Now, it didn't it didn't happen early enough in the day for me to really get a sense of how traders are going to respond to the index crossing through that threshold. So that's a bit of a shortfall in information here. That would have been really nice if it had crossed through that earlier in the day, and we could see what kind of triggers got made. We could see, what various players do in response to that, and see if it inspired a new round of buying. As it was, there was a bit of a bounce at 2800 today, but it did, as you can see, the index collapsed right through it just in the last few minutes of the day. There was a little blip a couple minutes later, but the market did end on a downward slope. So right there, I see an ambiguity in my interpretation. I don't feel that confident in interpreting what the market or how the market has responded to 2800 at this time. I'd say 55% inclined to interpret this negatively, just because these last several trading days have been so negative, and when the market or the index passed through 2800 today, there was a little bit of repurchase, but it failed to hold it, and it just didn't look like it inspired very many people. Most of the volume seemed to be sellers coming in. So, like I said, I'm not that decisive. I'm not that decided about interpreting that, but I'm inclined, 55% to read that as a negative view of the 2800 threshold. So, given that interpretation, going back to that previous time the 2800 threshold held, if I'm saying the market is now negative on that floor, or has now not been sufficiently inspired by that floor to begin buying aggressively again, then where is the next question? And that's where I look back down here. The last major long-term floor was down here in the range of 2730, or maybe you want to call it 2715. Somewhere in there was the last time there was a sustained sort of floor for the index. So it provides a clear point where there was buyers interested. It's another psychological level, another potential trigger level. I'm making that speculation based on empirically looking at the way the index danced around that figure for so long, suggesting that that's a place where many people were putting their triggers for selling or for buying. So I think that is the next question this market wants to ask. I think 55% believe that it has said no way Jose to 2800. And if that's the case, then it's going to want to re-ask this question that the market was previously asking, which is, well, what do we do around 2720 or 2713? Back in May and June, when there was that long sort of sideways stretch around that floor, I think that question is going to be reposed to this market in the coming days. So for my purposes, I'm predicting a lower market in the short term. I told you I'm only 55% persuaded in my interpretation that 2800 has been blown through, maybe 60%. If 2800 is regained, then perhaps the bulls can rebuild some momentum based on a long-standing floor back in July, or maybe 2774 becomes a new floor. So that's my minority opinion, if I can have one of those. And I think I would guess tomorrow that they try to recover 2800. That seems like a psychological point, and as I said, throughout July it provided a very good floor for many weeks. So I'd be surprised if the market didn't try to recapture, or the index didn't try to recapture 2800. And so my interpretation right now is, if it very well may do that, but unless it does it decisively and punches right back through it, to 2850 or at least 30, or get right up there. If it doesn't do that, then I see this index pretty quickly bringing up this question. What market do we do about 2715? So that's where I think things are going. Now I can be either right and glorious or wrong and embarrassed. Thanks so much for listening. Have a great evening.